So the big tax question is this: how do wealthy people keep their money working for them when selling their business, real estate, or other highly appreciated assets without paying hundreds of thousands to millions of dollars in tax? What if we, as business and real estate owners who have poured blood, sweat, and tears to growing our wealth, and who didn't hire expensive tax attorneys and CPAs to map out an exit strategy, knew their secrets? Instead of recreating the wheel, why can't we just model the way they deferred 30 to 50% in tax, paid off debt, funded their next business dream, and most importantly, leave a financial legacy to give to the causes we believe in most? What if their secrets weren't complicated at all, and you just need a guide who is a few steps ahead of you? That is the question, and this podcast will give you the answers. My name is Brett Swarts, and welcome to Capital Gains Tax Solutions.
Welcome to the Build It to Billions podcast, where we guide successful entrepreneurs and investors on the journey from millions to billions. We believe the key to scaling and compounding your wealth in life starts every single day with the mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal is to help you scale and compound your wealth in life so you can give more all of it away to help MVPs. My name is Brett Swarts. In each and every episode, we're joined by the world's top millionaires, billionaires, and entrepreneurs, where they share their story, insights, and wisdom with us so we can all level up and make a bigger impact. I'm excited about our next guest. He's out of the state of Oregon, and he's on a mission to help family offices with Bitcoin management and investment strategy. And we're going to be talking about to hold or not to hold Bitcoin forever. That is the question. The background of this gentleman is in the focus is really about, hey, most family offices, they struggle with their Bitcoin because of the asset. They struggle because the decision-making process was not built for it, and under pressure, even sophisticated allocators default to the same system that is already eroding their wealth. And his work is to helping them build a process that holds up before those decisions become unavoidable. Please welcome to the show with me, Mr. Eric Runge. Eric, how are you doing?
Good, Brett. Thank you for having me on.
Excellent. For our listeners getting to know you for the first time, maybe just share a little bit more about your story and your current focus.
Yeah, so I was in the retail financial advisory space for, about 19 years. Never really felt like a great fit there, but couldn't figure out why. And I think I always thought like an institutional allocator and didn't really realize it until I got into the family office space, and then just was blown away at how easy the space was to fit into. So that combined with Bitcoin, it was the asset that I was put on earth to talk about. So family offices plus Bitcoin, plus I liked how you said billionaire biblical principles, given that a lot of Christians think that wealth is evil. I don't believe that. I think the Bible says wealth is a blessing. So those three things combined, I like talking to family offices about Bitcoin.
Fantastic. And backing up, just back to, you growing up, Eric, who was Eric, and what was his, what's his superpower? I believe we've all been given certain gifts, God-given gifts to be a blessing, to help to others. What would you feel like is the one big gift God's given you, and how does it help how you help and bless people today?
Yeah, I grew up in a pretty abusive household, and I was call it an unseen child. My stepdad was harsh, and you could call me poor in the biblical sense, not in the economic sense. We were lower middle class, but poor in the sense of vulnerable, and didn't have anybody to protect me. And so having converted to Christianity at around age 19, I saw over time how God's heart is for the poor and vulnerable. And God built that into me, a desire for the poor and vulnerable, to protect the downtrodden, as it were. So I studied Austrian economics for quite some time and saw that the fiat currency system was creating the poor and vulnerable among us to a really large degree. And I hated it, but I didn't know what to do about it. Couldn't do anything about it until I saw Bitcoin. And so what I see Bitcoin is a way to help people lift up out of the spot that that fiat currency has put them in. So my gifting and calling, because that's my deepest core passion. It's not humanitarian work, it's capitalist work. But family offices are capitalists by nature. And so my gifting and calling is to talk at a high level to high level people about that which I think can improve the world. And that thing is Bitcoin.
Amazing. By the way, if you want to know more about what Eric's doing already, you can just go to familyofficebitcoin.com, familyofficebitcoin.com. Hey, let's dive into this this topic, to hold or not to hold Bitcoin forever, in just a second here. But I want to just clarify something you said in the beginning. You said institutional asset allocation versus family office allocation. So maybe just the one or two, maybe three big differences between the two.
The point I was trying to make was retail versus family office. You might be able to lump family offices and institutions into the same bucket. Maybe, maybe not. Like, let's be technical. An institution is technically a pension or an endowment. They think and act differently than a family office does, generally speaking. But really the distinction I was making was retail versus family offices. Retail thinks more, I need to be comforted. Can you make sense of the chaos out there? Whereas family offices and even institutions, they don't think like that. They think according to mandates, investment committees, 10 to 20 year timeframes, sometimes 3 generations of wealth. That's like the main difference. A lot of times retail doesn't care about the next generation of wealth and wealth transfer. So that's really the kind of the main difference that I have seen.
Okay, excellent. That's great. Thank you. That's really helpful. So now let's make the argument, and then let's do some strategy here to kind of discuss to hold or not to hold Bitcoin forever. So Eric, what is the number one reason that you would share for those who would think to hold Bitcoin forever? What would that be? What is the number one reason? And then we'll go to 2 and 3 in here in a second as well.
Yeah, I mean, if we're going to talk in the realm of sort of theory, I can't make a recommendation across a broad audience of listeners that they should hold something forever, because I don't know every person's individual, circumstance, that sort of thing. But if we keep it in the hypothetical realm in terms of Bitcoin as an idea, you have to think in terms of what the problem is first. And what the problem is that money has had an issue ever since the dawn of time. Money has been able to be manipulated by whoever is in charge of the money. So if we go back to 1971, the U.S. is 6 times more in debt than we have the gold reserves to back it up. So you used to be able to go to the bank and exchange your dollar for a certain amount of gold. That was called the gold standard. We were on it. But the U.S. government got out over their skis and they couldn't back up their reserves. So Nixon goes on TV in 1971. He temporarily suspends the gold standard, takes the dollar off the gold standard, and here we are 50 plus years later, still temporarily suspended. The problem with that is that it enabled the government to now print money freely. And print money freely they did. The US debt skyrocketed at that point. Inflation took off in unprecedented amounts. And what that did was it started to create a huge gap between the rich and the poor. The middle class effectively started this very long, slow process of dissolving. The poor got poorer and the rich got richer. Now, I have no problem with the rich getting richer. I have a problem with the poor getting poorer. So that is all driven by fiat currency. Okay, so that's a very short synopsis of the problem. The main reason that could happen with fiat is because it's printable. It's reproducible to infinity. There's no fixed supply. If we now fast forward, and we're going to skip over a lot of stuff, but we fast forward to Bitcoin, it's the only asset with an absolutely fixed supply. Even gold has a relatively fixed supply. It's relatively scarce. It's hard to make new gold, but it's not impossible to make new gold, to mine it out of the hills. Bitcoin's literally impossible. And if you combine that with all of its other qualities, it's a very, very unique asset. There's no other asset on the earth that's like Bitcoin. And so that's the starting point of the argument of why Bitcoin is highly valuable and should be considered as a long-term holding asset.
Excellent, because it's not unlimitedly printable like fiat, and it's fixed, absolutely fixed, and therefore the long-term the scarcity of it means that holding long term, the more it becomes popular, the more it becomes useful, the more it becomes universal in the world, the higher the price should go. Is that a fair summary?
Yeah, I can't make a future prediction about the price per se, but what we do know is from an economics point of view, the more scarce something is, generally speaking, the more valuable it tends to become. Like diamonds, for example, we don't need those to live. We need oxygen to live, but oxygen's free. Well, it's because it's abundant. You can go outside and breathe it for free. Therefore, it doesn't cost anything. Diamonds, you don't need them, but they're very, very expensive. Now, outside of conspiracy theorists arguing that the diamond industry has manufactured demand for diamonds, maybe that's true, maybe it's not. The point is, the more scarce something is, the more valuable it tends to be. And so, yeah, Bitcoin with it being absolutely scarce, completely fixed. The idea is that it's a asset that is not like unto any other asset.
Okay, good. What's the second, maybe argument or theory out there of why you want to hold a Bitcoin forever?
I mean, that's it. There's really one argument that Bitcoin is unique. If it, everything else would be a breakdown of that argument, and that's what's called the Bitcoin rabbit hole. I mean, we've only looked at one of Bitcoin's characteristics, its scarcity, but there are other reasons why people theorize that it's useful. And so we could go into detail and go any number of directions from that. I mean, if you wanted to think about it this way, I think the world needs a better store of value and it needs a better day-to-day currency. And I think Bitcoin could potentially provide both of those. Now, so let's think about this from a different angle. When people think of money, they generally tend to think of cash, that which I'm going to go to the grocery store with and buy a gallon of milk, right? It's my spending money. Money actually breaks into two categories. Store of value, which is what we seldom talk about, and then your everyday spending, medium of exchange, it's called. Everyone is arguing for Bitcoin as a medium of exchange and saying, it's failed because we don't use it to buy a pack of gum. Where Bitcoin is at in its maturity cycle, in my view, is as a store of value, a potential store of value. That's the other use case for money that the rich know about that regular people don't really even consider. Other stores of value are things like real estate or gold or oil or stocks, because nobody's going to put their money in cash when it inflates away at 2 to 12% a year. They're going to move it into something that is going to hold value. So if we think about Bitcoin as a store of value, and that's one of the two use cases for money, then we can start to frame Bitcoin properly and think about it rightly as a potential replacement for current stores of value, or at least a competitor.
All right, let's take the other side, right? So for those who might theorize that maybe it's not great to hold it forever, maybe it's good to buy and hold, and then it's also good to sell at certain market fluctuations that perhaps are becoming I don't know, predictable is the word, but maybe talk about that. Like you see the fluctuations of Bitcoin. I think the high maybe 130ish, right around there, and I think we're at 67 today. And I feel like we were right between 80 and 100 for a long time, so we broke through 100, and then it went to 1 to 110, and then it broke all the way to about 129, 128. I think if I'm around there. Now we're back down to 65 and 67. So just that maybe strategy of working the marketplace for the more advanced family office who has desire to be in Bitcoin and desire to make money off of trades. What's kind of the theory there that maybe you could share and bring light to it?
Yeah, great question. It depends on what you mean by make money. That depends on what your definition of money is. So if our core operating assumption is the fiat system, and in our thinking we default to fiat, everything baselines and defaults and cashes back out to fiat, then the trading mindset makes sense. If Bitcoin goes up and I make profit, then I'm going to sell it, cash out into that which is actually valuable, which is fiat currency. But Michael Saylor asks the question, because people have asked Saylor, when are you going to sell your Bitcoin? And his answer is never. And the response invariably comes back, well, then what's the point? And Saylor's answer is, what's the point of holding Manhattan real estate in the year 1700 or something like that? He says something along those lines. Those people didn't ever buy it so that they could then cash it back out into a dying currency. The point is that Saylor tries to make is certain assets are superior to others. Now, I'm not trying to argue that Bitcoin is superior to cash or to real estate or vice versa. My point is more of a theoretical one, that if we think in terms of fiat is the ultimate goal, I need to cash this back out so I can have spending money, then we're thinking wrong. I don't want to cash out of my Bitcoin. So if we're going to, so the goal then is to reframe the conversation. What if in 100 years, instead of thinking about buying a gallon of milk for $4.79, I think about it in terms of 72 Satoshis. That's a broken down unit of a Bitcoin. One Bitcoin is made up of 100 million Satoshis. It's like 100 million pennies breaks down $1. 100 pennies breaks down $1. 100 million Satoshis is one Bitcoin broken down. What if my denomination changes to a Bitcoin standard? That's the goal. Not that I know that it will or that it ever will, but the point is it's useful to step outside the fiat system just in terms of your thinking. And so Bitcoin is completely outside the fiat system in that regard. Everything else cashes out into cash, into dollars or yen or whatever. Bitcoin cashes out into Bitcoin. And so if we think in that way, it doesn't actually make sense to sell Bitcoin ever. It makes sense to hold it because you are buying insurance against the current system.
Excellent. Thank you. We're speaking with Eric Runge, everybody, and you can, I spelled R-U-N-G-E, and you can find him at familyofficebitcoin.com, familyofficebitcoin.com. So let's talk about ways in which people do, instead of selling, because, you know, they have either large capital gains tax, right, challenges, and but do need to have some spending money or do want to be able to diversify. They borrow against is the typical strategy. Do you want to just kind of discuss the advantages of that?
Yeah, and I'm full disclosure, I'm not an expert on how to borrow against Bitcoin. What I do know is in a broad general sense that you can do it. You can take a loan against your Bitcoin as collateral. That may or may not be safe, depending on the lender, depending on the strategy. I couldn't tell you on that. But what I do know is that it is possible to do that. And those programs are available. The idea and the goal is that if you believe that your Bitcoin is going up in value in terms of fiat over time at, let's just say, a rate of 20 to 30% per year, and let's say your interest rate on your loan is 8%, then you could borrow cash against your Bitcoin, and your Bitcoin increase in value is more than enough to cover your interest rate plus repayment of your principal. So that is one strategy that people will use.
Okay, good. I like that. Now let's talk about getting more capital into Bitcoin. I think a lot of people do want to invest more into Bitcoin, but they have to sell their large stock position or their large Bitcoin or their large real estate or business, right? And they have this massive capital gains tax. And so like, how do I get into Bitcoin in a tax efficient way? We have a solution that I'm going to run by you here in a second, Eric, but what have you found, you know, maybe the biggest deterrent besides capital gains tax, right, to getting into Bitcoin from a large business or a large piece of real estate that they want to, you know, tax defer into Bitcoin?
Are you talking about just a deterrent being the taxes as the number one thing?
Yeah, the tax, right? So that's all, right? Really just better way to put it is like, what strategies do you know of people that want to get into Bitcoin, but they're stopped because of the capital gains tax? And then I want to offer a solution, and then we'll kind of bounce off ideas here.
Yeah, that's a great question. That's actually, to be honest, more of a tax advisor question than anything that's my area of specialty. I don't know of any tricks in the code or legal outs in the code per se to sidestep capital gains on a large stock position or real estate position. I know Bitcoin tax loss harvesting methods and strategies, but bypassing cap gains is not my area of specialty.
Okay, great. So let's go there then. This is good. Maybe I can teach you something, and maybe we can bounce ideas if you're on this one. So we actually did a $13 million car wash exit out of San Diego. These clients of mine, they built a car wash from an old taco stand. If you've ever been to San Diego, it's the best tacos and burritos ever. Okay, and the guy had a taco stand. They're like, hey, we need your acre next to our acre, but we'll put your taco stand inside of our car wash. Long story short, they built this amazing car wash. The value all in was $4 million what they built it for their basis, but their value jumped to $13 million. Well, we're in the 2021 area, and like we thought real estate was high. And so instead of doing the traditional 1031 exchange and selling high and buying in the same marketplace, in the same place, you know, in the same high market, same investment, we set up these trusts for these sellers, and we moved them in their positions into these trusts, tax deferred, and issued them a promissory note. They paid off all their debt. And the cool thing was, with portions of the capital, we bought Bitcoin through the trust, all tax deferred. In fact, we got it right around 40,000 a coin, right, which is pretty cool. And so they sold real estate, deferred the tax, and that trust invested into Bitcoin, right? All tax deferred. Now we rode the wave from 40 to 130 to about 67 right now today. And so to me, it's kind of like they 1031 to Bitcoin, okay? They sold a business, deferred tax. They did through a promissory note with an installment sale where this trust owes them the money, kind of the concept of loaning against your Bitcoin, and you're not at a taxable event, right? They sold for a promissory note, but this trust can go in and out of Bitcoin. It can go in and out of real estate. It can go in and out of stocks. This also works for stocks and business sales and primary home sales. So to me, it's one of the best kept secrets that you can actually sell high, whether it be a Bitcoin or stock or real estate, diversify back in at any time. There's also no timing restrictions. You don't have to buy it within a certain period of time. Like we could sit in Charles Schwab and just wait, right? And you can dollar cost average. And so this has been our strategy. We had another client who did the same thing for his large Airbnb property in Colorado. Multi-million-dollar exit, sold, deferred the tax, went into Bitcoin, right? And tax deferred. And he's also of the philosophy that basically never sell Bitcoin, and the upside opportunity there. And so this is just a tool, right, that people can use. I think it's missed. People don't know about it. That's why we're trying to get the word out on these type of podcasts, and our capitalgainstaxsolutions.com is our business. But I'm curious, when you hear this for the first time, what comes to mind? Because you've been in the industry for 19 years, right? And you've probably seen a lot of tax strategies presented. What comes to mind when you hear something like this?
Just a question, is it a monetized installment sale?
It's not. In fact, those ones we stay really far away from, because that's what's called a faux loan. They say, hey, Eric, we're going to give you a loan for 30 years, but we'll give you all the money, do whatever you want with it, but it's not really a loan. So we are using 453 properly. Real quick, close to 30-year track record, thousands of transactions with the tax attorney who created it, been through about 30 no change audits, never had a change or finding. So batting 1,000 legally. So let's assume that it's all legal and it's definitely not monetized. But it does take a team and a trustee, and we have to set it all up before the closing. But this has been done for car washes, for business sales. Actually, I actually did it for Bitcoin. Here's another story for you. We had a client who worked for Google exit Bitcoin, bought it at a very low value. It went to tens of millions of dollars in value. Never sold until they met us. And when they met us, we set up a plan to exit their Bitcoin. We exited about 54,000 a coin, invested into a business. So it can also go the other way. You can exit your Bitcoin, tax deferred, and it can be a startup capital for your business. And the value of Bitcoin went at that point to 68, and then it dropped all the way to about 15. Now it went back up to 130, now it's at 67. And so, but the point is, you can make strategic moves tax deferred on either side. And my thought, Eric, is how do you institutional or family office this for the strategy of 120 to 100? And arbitrage tax deferred, because you can do it within Bitcoin itself. You can sell Bitcoin into a trust in exchange for a promissory note, and then buy it back. Yeah, it is through fiat the way that we would do that. But that's the concept that I think is missing in the marketplace, and we've proven it with at least 4 clients now with Ethereum and Bitcoin and a couple other coins. But most people don't know about it.
Yeah. It sounds like it's worth looking into. It's my first time hearing, so I don't have any comments.
Cool. Yeah, if people want to learn more about that, go to capitalgainstaxsolutions.com. It's capitalgainstaxsolutions.com. We also wrote a book called Building a Capital Gains Tax Exit Plan. You can find that on Amazon, where we share that Bitcoin story. Okay, let's keep going here. We have a few more minutes. What haven't I asked you about Bitcoin and that you really want to share? Maybe this is the current marketplace. Like, where do you think we're at right now? We're in this world of some wars. We're in this world of interest rates staying where they're at, and inflation, and just some uncertainty out there. But what's kind of your instinct on what's going on right now with the state of Bitcoin?
Yeah, it's a funny place where we're at because the 4-year cycle, the halving cycle, generally in the past has tended to cause Bitcoin to behave in certain ways, price-wise, but it's broken out of that. It hasn't behaved the way that it always has in the past. One big factor in that, I think, is the institutional entrance into Bitcoin. As you may or may not know, the Bitcoin ETFs were approved by the United States in January of 2024. And so a huge amount of capital has been flowing both into and out of Bitcoin, but institutional level buying power. So that's much bigger than 17 million of the Bitcoin available are held by regular people, and a small percentage is held by institutional capital. But I think what that did was it started to change Bitcoin's behavior pattern and correlated it more to stocks, because when institutions enter, they treat Bitcoin a little bit more like stocks. If somebody's going to buy into an ETF and then pull back out, that's more of a stock correlated type of a asset. Whereas Bitcoin used to be the sort of rebellious asset that was completely countercultural to every other Wall Street asset. So it's caused Bitcoin to behave a little bit more like an institutional asset. And so as such, like for example, if you take Strategy, Michael Saylor's company, they're buying Bitcoin at a relentless, insane rate every single week, and they just don't stop. They're getting close to holding 1 million Bitcoin. And to remind everybody, there's only 21 million Bitcoin available. So when they hold that percentage of Bitcoin and they're not selling, that affects market dynamics. So Bitcoin has not fallen in some important ways, in the ways that gold has lately, or that stocks have lately. And my opinion is that at least a part of that is that certain institutions are entering Bitcoin and not exiting. So they're holding up the price. That's what I could say right now. I feel fairly certain about is going on.
Thank you. That's really thoughtful and insightful, Eric. And again, we're speaking with Eric Runge. You can find him and learn more about him by going to familyofficebitcoin.com. Bitcoin management, risk mitigated exposure, multi-generational wealth continuity, helping you to steward your Bitcoin and look at strategy and structure for potential family office that you're either running or listening to or what haven't I asked you, Eric, about Bitcoin that you want to just mention before we move to the rapid fire round?
Thank you. I think the most important thing to family offices is preservation of capital. They're not looking to buy casino assets or trading assets even with their capital. If they have $100 million or $10 billion, their biggest goal is to not lose that money by doing something stupid. So that's what I seek to do, is bridge the highly volatile asset Bitcoin with downside risk mitigation, because I think it's an important asset for them to own and to enter into, but they need to be able to do it in ways that are responsible, that they can justify it to the investment committee, and that they can own it and sleep at night as well, knowing that they made a good purchase.
Awesome. Let's rock and roll to the lightning round. Here we go. Eric, number one thing, if you go back to your 20-year-old self, that you would tell yourself to do?
I would say study economics.
Awesome.
How long of an answer do you want to do?
It's a lightning round, so that's perfect. Study economics, perfect.
Good.
Question number two, number one book you've recommended the most in the past year?
Oh, I don't have a good answer to that one. I don't ever recommend books.
Okay, one maybe what you read that was a good book.
I've read Richard Wilson's Capital Raising.
Okay, excellent. Question number three. What are you most curious about right
now? I'm curious about the psychology and values of family offices.
Excellent. I'm part of the family office club too, by the way. I love Richard, and it's cool that you're reading his book. Next question. Best way you're using AI?
Oh, AI is writing my strategies and plans for me right now, especially Claude AI.
Okay. Yeah, cloud seems to be taking the front of the race here for AIs. Last question. After all your success helping all the people you've helped, Eric, what's the best way that you stay centered in your values and to stay encouraged to charge forward to reach even higher heights?
Daily reflection. I read the scriptures. I think through why I'm doing this all the time.
Amazing. Eric Runge, I want to just thank you for being on the show, sharing your wisdom with us, diving into Bitcoin, and talking and strategizing today. So appreciate your insights and your wisdom. I want to encourage everyone to reach out to Eric. You can find him on LinkedIn and or checking him out at FamilyOfficeBitcoin.com. That's FamilyOfficeBitcoin.com. And I also want to thank all of our listeners for listening and watching another episode of the Build to Billions podcast. We're on this journey with you to scale from millions to billions, so we can give more all of it away to help MVPs, the most vulnerable people. My name is Brett Swarts, and I want to encourage you to have a plan for your Bitcoin exit, business or real estate exit, to be able to defer capital gains taxes, not using a 1031 exchange, maybe perhaps diversify into Bitcoin should you want to do that by setting up a plan. Go to capitalgainstaxsolutions.com to get started with myself or my team members. Appreciate everyone listening or watching out there today, and we'll talk to you again real soon. Bye now.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.